Good evening, everyone. We're going to be trading the FOMC live, which is going to be in the next about 8 minutes. So I'm just going to share my screen with you. Okay, it's a strategy that I learned about 2-3 months back, and it basically involves hedging the currency pair that is going to have volatility just before a news event. So FOMC is going to be affecting the US dollar, as you can see from the Forex factory economic calendar. So we're expecting it in the next about 8 minutes. Sorry for that. I've written extensively about the strategy on our website. It's a scalping strategy, and in about 5 to 10 minutes of a news event, you can make about a good 30 pips. I've back tested it and forward tested it for quite some time. I'll show you results from this previous week as well. This was on the 12th of February. We had the Australian jobs report, and as you can see there, just before the report, I'll show you what I did. Okay, this is a chart of Aussie Canada on 12th of February for 1 hour. I bought the Aussie CAD with a stop loss of about 40 pips, right at where this blue arrow is. And so I waited for the news event and it came down and hit my stop, which was about 40 pips away. So the other thing I did at the same time was I traded the Euro Aussie as well. I was hedging the Australian dollar against the Euro and the Canadian dollar. So on this, I went long just before the news event, and I had a stop loss of about 30 pips and a take profit of about that's over 100 pips. So as you can see, in the previous trade, I lost about 40 pips, and in this trade, I gained about 100 pips. So that's the same thing we're going to be doing right now. We are waiting for the FOMC, which is a US dollar event, which is 10 p.m. local time over here. So I'm going to be trading the FOMC, and I'm going to use two currency pairs for today, which is Euro and Pound Dollar. This is 1 hour charts on tradingview.com. So I'm going to go short on the Pound Dollar. That's because Pound Dollar is at a very significant resistance point, which is 1.5440. I usually try and look at technicals a bit before deciding which currency pair to go short or long. If technicals don't really support it, it's not really necessary, so it's not a matter of that. And then I'll be going long on the Euro dollar. So on this, we are selling the dollar, and on this pair, we are buying the dollar. So what we are expecting is on the Pound Dollar, we have a stop loss of about 33 pips. So we are expecting, if the FOMC comes in good, we expect the take profit on the Pound Dollar to be hit, which is about 87 pips, and their stop loss is 33 pips. On the Euro Dollar, if the FOMC is positive, the Euro Dollar, this currency pair should be falling. We have a 27 pip stop loss with a 72 pip target profit. So the basic work around this strategy is that you hedge one currency against two different pairs just before the news event. So I'm just going to adjust slightly to make it a market order current, just to reflect the current market price. There we go. And take profit there. So right now on the Euro Dollar, we are buying it, and we have a 30 pip stop loss with a 70 pip take profit. On the Pound Dollar, I'm going to adjust this as well. Okay, Pound Dollar now 37 pip stop loss and 82 pip take profit. So about 4 minutes away from the FOMC, and I'm just going to come to Forex Factory here. I'm sure there's going to be a live event. If there's no, I'll just watch for the movement on the both the currency pairs. So what we're expecting one of the trades to go in a loss and the other one to go in a profit. But since we're using a risk to reward of 1 to 2, we'll end up with a net gain of about 30-40 pips at least. So just about 3 minutes away from FOMC now. In the meantime, I can show you one more trade that we had using the same strategy. This was on the 12th of February again, and it was around 1:30 p.m. local time here, where the Bank of England Governor Carney spoke. So we had two trades on the pound. On the pound Aussie, we bought it. As you can see, we bought it at the white line and the blue arrow over here, and it hit our take profit at the green line. We had our stop at the red. Just zoom in to show you more clearly. And we go to the next one, which was pound dollar that we traded. Now on this one, you see our stop loss got hit, and we sold pound dollar, and the remarks from the governor were basically in favor of the pound. So that's why we found pound dollar rallying and hitting our stop loss. So this is again about a 40 pip loss on this, and we have about 100 pips gain on this. So that's again around 60 pip gain in this trade. And literally this happens usually within about 5 minutes. The thing you have to be careful about is sometimes you need, for this strategy to work, you need high impact events which are going to cause a lot of volatility in the market. If there's no volatility, it's really difficult for the strategy to work. So it only works during news events. And again, it doesn't work during all news events. For example, it did work on last week, Wednesday, which was the February the 12th. It did work for the Australian jobs report. It did work for the pound when during the inflation report. And it also did work for the US dollar during the core retail sales, and unemployment claims. But for example, like if you have to look at today's calendar, it didn't work for, there was not too much volatility during, also this is a high impact event, the building permits of the US dollar and the PPI, but it doesn't cause a lot of volatility in the market. So you basically can't trade because you need volatility, you need high volatility in the market. So we're 1 minute away, and let's go back to our charts and see what comes out of the FOMC. If there is no volatility in the market, it usually doesn't work. There we go. We have the volatility, and the euro dollar is in 37 pips profit currently. I'm just waiting for it to hit the take profit so that we can look at the pound dollar. And you can see the pound dollar is in 37 pip loss. So I'll let the euro dollar run into and hit my take profit, and I'll be stopped out on the pound dollar. There we go, pound dollar. That's a 37 pip loss. And euro dollar still waiting, 53 pips. 52. Let's see if it goes up again. Still 50 pips. Okay. I think that target is a bit too much for this, and I might just close it down at around 50 pips. All right, there we go. Yeah, I think let's close it down at around 50 pips. There we go. So our target of 50 pips has been hit. Over here, we lost about 30 pips, and over here we gained about 50. So that's a net gain of 20 pips in, as you can see, it didn't even take 5 minutes for that to happen. Immediately the FOMC was announced. That has been executed. I need to close a few trades on my reel. That's all I can say about the strategy. If you are, so you can see on this we have 50 pip gain, and on this we have a 30 pip loss. So that's behind strategy. Now the next event is maybe what we can look at. I mean, we're really done trading. It's not even been 5 minutes. It's been 2 minutes since the FOMC, and it looked like it was the dollar was got weaker. So that's why we have this one. All right. That's all for the strategy, really. It's basically just you just hedge one currency against two different pairs just before a news event, and hope use a risk to reward ratio of 1 to 2. So you end up with a loss in one trade and a profit in the other. So thank you very much for watching. Let's see when the next high impact event is. Maybe tomorrow. Friday. Can't really see anything. Maybe I'm not really sure if the retail sales on the pound and core retail sales on the Canada. Maybe this might have some volatility, but they're not very high impact events. So until next week, I think that's all from us. And thank you for watching. I don't know where this. Sorry. Okay, thank you.